Hello and welcome. You are watching Business Plus here on News9 Live. I am Krishnakumar and I'm being joined by my colleague and friend Suyash Maheshwari in the studios. And we, as always, begin with a check of how the stock markets closed the trading session. Suyash, talk to us. Not a very good opening for the markets. Markets opening in the red. How did they close?
So, Krishna, after remaining directionless for the majority of the trade, Indian markets witnessed some sort of a buying interest in the afternoon session, and bulls charged back, taking the index higher up about 0.5%.
That's right.
And as a result, the markets were able to close in the green for the fifth consecutive session. Now, at today's close, Nifty was up about 0.57%, above the 19,720 mark, whereas Sensex gained about 0.58%, above the 66,250 level mark. Now, Nifty mid cap and the small cap moved largely in line with the markets, and they were up 0.77% and 0.47% respectively. Now, talking about the major participants of today's rally, it was the Nifty banking index. The banking index has not participated in the 5-day run, but today we saw some interest at lower levels, and as a result, the Nifty banking index was able to close almost 1.06% higher. Another few sectors that participated in today's rally was realty, which closed about 1.5% higher, PSU banks, which gained about 1.2%. FMCG stocks and pharma stocks, on the other hand, Krishna, saw some profit booking. They have been the major drivers in the last 4 days, but today we saw some selling in some of the headlining counters. Now, one of the sectors that I was tracking, Krishna, was the oil and the oil manufacturing companies. Now, the stocks were down almost 10%, although they saw a sharp rebound and were closed largely flattish. Now, the reason why they fell about 10% in today's trade is obviously because of the crude prices, which have scaled almost a 10-month high. Now, oil manufacturing companies, what this means for these companies is that their input cost has increased, and as we know that the retail fuel price has largely remained stable. So their input cost is rising, but their selling their selling price has not been able to rise. As a result, the profit margins have squeezed, and that's a big dampener for the sector. And I was just looking at a report, Krishna, in Q2 profit margins in the petrol has come down by 45%, whereas margins in diesel have turned negative in Q2. So that was a major dampener, but we saw some buying interest at lower levels, and as a result, the stocks were able to close on a flattish note. Now, talking about the top gainers and losers in today's trade, Krishna, was Coal India, which has been on a 3-day gaining streak. In the past 3 days, the stock has rallied more than 17%. Today, it touched a 4-year high. And Larsen & Toubro was another stock that was in the news today. The stock rallied over 4% after news made rounds that Saudi, it is likely to bag a deal with Saudi Aramco, which is worth around 24,000 crores. Other gainers in the blue chip segment were IndusInd Bank, SBI Life, and SBI. Right. Now, talking about losers, the top loser in today's segment was Tata Consumer Products. After the stock fell about 2% after the company denied that it is in talks with Haldiram to take over the majority stake in the company. ONGC fell about 1%. Britannia was one among the FMCG names which took a beating today. The stock witnessed profit booking at higher levels. Sun Pharma, same story, profit booking in pharma space. Higher levels, we are seeing profit booking over there. Mahindra & Mahindra in the auto space was also among the losers in the blue chip space.
Any particular reason for Mahindra & Mahindra in this space apart from FMCG and pharma?
So the auto sector has been largely range bound in the last couple of weeks, and as a result, whenever we are seeing any sort of a rally, bears take charge and bring down the prices. Right. More or less, they are trading in a range-bound mode.
All right. In fact, that's the story for the whole markets, isn't it, Suyash? The entire markets the broader markets have been in a range-bound way for the last couple of weeks, at least, to say the least. Let's now take this across to the big guest joining us live on this broadcast here, Suyash, on Business Plus on News9 Live. We have Mr. Sanjiv Bhasin, Director, IIFL Securities Limited. Mr. Bhasin, thank you so much for taking time out to speak to us here on Business Plus on News9 Live. Great to have you over here. I want to begin by asking you, your outlook on the markets based on how they've been trading in a largely range-bound manner without any big global cues or, for that matter, local cues, so to speak. And many analysts pointing to the fact that for now it's going to be all about stock-specific action. What's your take, sir?
Yeah, good afternoon. So you're missing the woods for the trees. When in my 30 years have I seen such a big move on the mid caps, and they are refusing to fall. Look at PSU Railways, look at PSU Defense, look at PSU Oil. You name the stock, and you name the basket on PSUs. Since Prime Minister Modi, mentioned in a lighter vein to buy PSU stocks, they've been on fire. And people are misreading the movement on the Nifty at 19,300 to 700. Well, the Nifty has finally broken out, and you will see 20,000 coming now in the second half of September or maybe before. But like I said, the feeling of missed out is humongous. Mutual funds have been sitting on cash, and the new money is more directed towards mid caps, where you can pick and choose your winners on a daily basis. It is a little bit frothy, but that's the way of the market. The under ownership is seeing a lot of people now joining in the party, and hence you're seeing that the mid cap outperformance. For today, I think we definitely have outperformed. Given that weak global cues, high oil prices, bond yields rising, the markets are refusing to ignore that, are refusing to accept that, and are moving beyond that. So today was the strongest day I've seen on the Nifty in a long time, and I think that now 20,000 as a hurdle is going to be maybe breached in the next week, 10 days.
Right.
So,
Just a follow-up question to that. There is also talk about overheating in the markets, especially in the small cap stocks, and that possibly being a threat for a market rally so far, which has been worth over $770 billion.
Well, in a bull market, you will always have the proverbial people of overheating, and there will be periodic corrections. But it's not happening. That's what we are all waiting for, and that's what most people are on the sideline. Look at the foreign investors, the whole undertone. They've been bearish on IT, and IT mid cap are hitting new highs. Same is the case with PSUs. PSUs have been the darling of the market after I don't know how many years. I've been in the market 34 years. The last 2 years only belong to PSU, and they are refusing to relentlessly, just move in one direction. So yes, even I'm in the camp that there could be a little bit of fraud, but this is where you have to be discerning. You have to own stocks. Look, in bull markets, the only people who really make money are the ones who can sit on their positions. So you have to sit on good stocks, see the underlying, see the type of macros which are changing, and see the flows. For once, it is not, in the last 2 years, it's not the foreigners, it's the local investors who are putting their money where their mouth is and creating an asset class called equity, which has been missing in 140 crore people.
Sir, as you said, Indian markets have outperformed recently, and in fact, in the last 5 days, Nifty is up almost 2.5%. Now, this comes at a time when there are any fresh triggers for the market. In fact, crude prices have been rising, which is a dampener for a net importer country like us. So, what's driving, sir, the optimism in the market, sir?
So, always remember, markets are very, very more learned than all of us together. All the macro and micro and oil and gas and bond yields, markets know very well all that. So you will keep not you, generally all the analysts will keep wasting their time on what the reaction should be. Markets will chart their own course. India is no longer that 30-year back that crude will go to 100. I remember when the Ukraine crisis broke out, we went to 120 and they said it's all gloom and doom. Well, we are in the best place ever. We are a power surplus country. Our current account deficit is at the best. Our reserves are very, very stable. Yes, high oil prices are going to be a little bit of a dampener. But remember, growth in global markets is the harbinger for that is going to be oil. Oil is a growth catalyst, not a growth retarder. If there is high demand for oil, it shows that there is growth. Now, in the short run, the rupee and the pressure on the oil companies will be a part. But who cares about that? Mahindra, Maruti are seeing the best sales ever, and it tells you that there is a waiting list in autos. Even though crude prices are at record highs, we are seeing no let up in the consumption play. So you will have to divulge yourself from discarding the macro and micro and watch the price. Bhau Bhagwan che.
Right. Okay. We'll keep oil separately. and you're talking about the fact that India's macro fundamentals are absolutely fine. There's nothing to worry about as far as the markets are concerned. That point is also taken. But what if I were to talk about the triggers that have been affecting markets in the recent past, at least, which is the US Fed rate hike? We have another US FOMC meeting that is slated to happen in the next 10 days or so. And then markets, apparently, some analysts say have already factored in a 25 basis point rate hike in the US already. Global interest rate scenario will certainly impact the Indian markets going forward, Mr. Bhasin.
Well, that is well known. It's been 1 year since the Fed had lost credibility. In 8 months, he went from 0.5 to 5%. And who got damaged? 3 of the US banks failed, and the big behemoth Credit Suisse. So yes, high inflation is a negative, and interest rates rising is a negative. But I beg to differ. I think the RBI has handled the monetary position, the FX, the bond yields, and the rupee very, very stably. And the Fed now is not going to raise rates. In fact, he will be on hold. But the problem is that yes, rising yields are not a good trigger, and that's why you're seeing the volatility in the US. But I think it's a passing phase. There is divided opinion in amongst the Fed members on the, how much. How long they were going to hold rates, but I definitely think September they are going to hold rates. There's going to be no change, and then they will take it as per data comes. You must also realize that their raising of rates has brought down inflation from 9.5 to 3.5. So you cannot expect miracles of 2% coming overnight, but holding the rates here will be very, very good, because the US economy has startled everyone by being very, very resilient even in the face of high inflation and high rates. So we'll have to watch out for more data. But in the meantime, the demographic premium for India will stand out, and that will be the best market globally, at least now and in the near future till the elections.
So, to your point, as you said, you don't expect FOMC to raise interest rates, but at least some analysts, at least what we are reading, are expecting a rate hike. And I just want to understand that, does a increase in food and crude prices, which are historically known to be extremely volatile, warrant a rate hike? Because core inflation, sir, as a matter of fact, has largely remained in the range or has not exceeded the expectations.
Look, like I said, I concentrate more on stock prices, the earnings, and the macros. You are right. This is what economists do. That's why, luckily, I didn't follow any economist, and I'm handsomely made money, and my clients have made money. You can read my lips. On the 1920, there will be no rate hike. A. B. Food and oil go hand in hand, and you've seen a control on that. But it was extraneous because of the supply chain disruption, the problem with Ukraine, and so on. A large part of the logistics has been done with. You cannot expect a mild recession to not trigger off a problem in most of the other European market, which it has. But look at the underlying. Apple is back to $3 trillion. Microsoft is on the verge of $3 trillion. The Nasdaq almost scaled new highs, and a 3-day correction is very, very healthy for the market. On the other hand, you have India, which is outperforming and at the cusp of festive season, where you can't get tickets to in airports. Railways are running fine, and markets are doing well. So there is a thin line between macros and the markets, and that is what is being played out now. Money is sitting on the sideline and wants to buy stocks, and that's why the retail flows are the ones which are driving the markets. And we'll again chat when there will be no rate hike, and we'll see 20,000 by 20. Yeah. Call me on
Fair
that
enough.
day.
Fair enough. We will keep you. We'll come back and talk to you. Hope you join us, on that day again, and then we'll have the conversation again when your predictions go right. But in the meanwhile, I have to ask you. You're talking about the slowdown in the European markets. Let's go sector specific as far as Indian stock markets are concerned. IT pack has been under pressure because of what's been happening in terms of recession in other markets in the US and Europe, affecting their own order book. Talk to us, as ITS sector, it's a blue chip sector in India, has been under pressure. What would be your outlook?
Well, like I said, there is a discerning way of analyzing stocks. Mid-cap IT are hitting new highs. LTIM, Persistent, Coforge, HCL Tech, Tech Mahindra, 5 stocks I've named which have hit 52-week highs. And I've been a proponent of them from 1 year. Secondly, we all know that AI and higher rates are negative for IT budgets. But Indian IT has matured and they've understood the markets very well. Nowhere have you seen a let up in the guidance. So I think that if Nasdaq is going to new highs, it is ignoring most of the macro weakness, and Europe to some extent is being priced in. But the biggest caveat is that the tailwind for the IT sector is now the weak rupee, which will add to margins. And I think business will be even more better as we get a tailwind on the, we get a consolidation or a stalemate on the rate cut, which I'm very sure is coming this month. So there will be no rate hike, and that will ease the pressure. And then we'll see how budgets play out. But in the meantime, select IT mid-cap stocks are hitting new 52-week highs.
Sir, as you just mentioned, rupee has been weak. In fact, yesterday it fell to a 10-month low. And this comes at a time when India is outperforming most of its developed and emerging markets on most economic metrics like growth, when it comes to growth, the stock market returns. So why is the rupee under pressure, sir?
Well, you've seen that there is a strength of the dollar, which has come back from 98. It has scaled 104.5. The dollar index is showing you that if rates are going to be higher, then the money will be back in dollar-based assets. But it's a temporary storm. For India, the RBI has handled the rupee very, very well, and they are letting the real effective rate, exchange rate, be more weak, because that will give an impetus to exports. As you are aware, we have been mostly a domestic consumption market because of the global slowdown. But if the rupee starts to weaken, it gives an impetus to pharma, IT, and the other sectors which are export oriented. So I think RBI has played it well. Yes, 83, 83.20 may be the top, and that could be for some time till we get more news on the Fed, rate stance.
Sir, just a follow-up question on rupee only. I was just reading a survey before walking into the studio, which suggested that rupee will trade near its very close to its historic lows in 6 months. And in fact, most analysts, like nearly 1/3 of the analysts, expect rupee to touch a new low in a year's time. Now, do you agree with that outlook?
Why are we wasting our time over 1 year? And analyst expectations go all over. You should have heard JP Morgan in January of 2022. They upped the IT budget and they said IT stocks are outperformers. And in September of last year, they said IT is the biggest underperformer. The IT index peaked in January and made a bottom in September. So don't go by foreign brokerages. I don't want to name anybody, but they are just selling their, their whole macro picture. World doesn't move in that. 1 year rupee is a very far picture. We have the elections and so on. And I don't want to go that far out. I am talking of hitting new highs in September, and that's what you should be looking for.
All right.
You should be giving more incentive and more courage and more conviction to stay put and buy good stocks.
Sir, talking about hitting new highs and your expectation of Nifty soon hitting the 20,000 mark, what sectors will drive that rally?
Yeah, so I think Reliance is poised for a comeback. It has seen the balancing of the portfolio after Jio. I am very, very bullish on ICICI Bank. Metals are in their own, space where Tata Steel, Hindalco, Jindal Steel all have hit new highs. IT is revving up, and you have the whole consumption play which is doing well. But I think Apollo Hospital, Reliance, Grasim, ICICI, these are my 4 large cap top picks, and I think they will lead from the front towards 20,000.
For those investing in the indices per se, Sensex and Nifty, be it mutual fund investors or
fund investors.
For them, what would be your outlook on Sensex Nifty from here on for the rest of the year?
By the way, Coal India and L&T have hit new all-time highs. Coal India is up 33% in the last 6 months. So not even 6 months, 4 months. And that's telling you that the left out feeling as far as energy, thermal, Coal India was to trade at 12-13% dividend for years, 90, 95, 100. And I used to tell people that you can't go wrong in this stock. And today, that whole thermal power avoid has played out brilliantly. So my call is that stay put 50% in large caps at this time, and 30% in mid or small caps, or choose your mutual funds which have a good exposures, maybe some to the PSU basket. But Nifty and the Nifty Bs and the bank Bs are the best instrument to play. If you ask for stocks, like I said, IGL, GAIL, Concor are three, and IX and IRCTC. These are five PSUs which I'm very bullish. I have done my research in them, and I think they are excellent businesses to be in. The other four picks which I mentioned, Apollo Hospital, Reliance, ICICI, and Grasim. If you made a basket of these stocks, you will do extremely well. But again, I reiterate, consult your RM, take a position, try and ask. IIFL Securities does this. We have one of the largest broking houses pan India on retail, and we'll advise you to how to manage your money and diversify your asset classes. But doing a SIP with good mutual funds is the way forward. In the near term, there will be plateauing of returns, but longer term wealth will be created.
Sir, one final question from me, since we are talking about sectors. Banking, the banking story, banking index had not participated in the recent run-up. I just want to understand your outlook on the banking story.
Well, look, there is an RBI, meet, and there is some talk about what the RBI will be planning. But like I said, banks are in the best place ever. When did you see PSU banks hit all-time highs? And I think that the underperformance of Bank Nifty was more to do with the plateauing of HDFC Bank after the merger. I am very, very sure that that will now start to add. In fact, today the Bank Nifty was an outperformer. So Axis, ICICI, and some of the smaller names, particularly the likes of IDFC First, RBL Bank, and the PSU basket are looking extremely good. We are at the cusp of the festival season where credit will expand at the fastest pace. Consumption is raring to go. And I think that all the spaces, entertainment, travel, tourism, and real estate, because mortgages are seeing a new revival. All these are very, very good harbingers for the bank Nifty itself. And I think from here, the Bank Nifty will also scale new highs in this month itself.
All right, we will leave it at that. Sanjiv Bhasin, Director, IIFL Securities Limited, thank you so much for taking time out to be with us here on Business Plus on News9 Live and giving us all that wisdom on how to invest in India's stock markets. Fantastic having Mr. Sanjiv Bhasin, don't you think, Suyash?